Hi everyone, it is September 29, 2022, and I can't be with you for the Free Friday class, so I'm just gonna do it today, September 29. It's a Thursday. I'm gonna share to you a few slides that I've made for the class, and I would also be repeating a few hedges to create in today's time. So for today's class, I do want to talk about what Druckenmiller said, which is flat returns for stocks for a decade. And in my view, we ignore his advice, we will ignore it at our own peril. So we may want to hope for the best, but we have to prepare for the worst. Let's understand what just happened in overnight. So this is a good explanation. Why did the Bank of England go into the market to buy up 65 billion pounds of UK government bonds maturing 20 years, including another billion of pounds today? It all stems from a dramatic collapse in the price of the government bonds called gilts. A collapse magnified by Friday's fiscally loose mini budget. That was Kwasi Kwarteng doing some tax cuts. The collapse in these prices caused a liquidity crisis, what is called a liability driven investment fund, which have a gross value of roughly £1.5 trillion. A staggering £1 trillion has been invested in government gilts and other bonds. These are largely leveraged funds, meaning when they buy gilts, they frequently use them as collateral to raise cash in what is known as the repo market, using the cash to buy more gilts, then pledge the gilts again and buy more gilts. In other words, it is highly levered instrument. So let's understand that the only reason why the UK did that was to prevent a massive in what other thing, if it was a simple retail fund, it would have been margin called today or last night. So the risk of raising money in this way is that as the value of the collateral collapses, the funds have to somehow find cash to repay the money they've borrowed. This pressures to sell more gilts and other assets, which is a vicious spiral. It risks a market bloodbath, and at this point, I haven't made till now, the LDIs or the liability driven investment funds are finally owned by salary pension schemes as devices to better match the liabilities to millions of pensioners with future income from assets. The huge risk is now that they could become formally insolvent because their liabilities is now greater than their assets. And what Bank of England today tried to do with the emergency purchase of gilts is to drive a temporary price of the gilts up just to give time for them to sell assets in a more orderly way, such that the repricing of the gilts does not lead to a market bloodbath, which is going to happen eventually. So far, it seems to be working, but the Bank of England accepts that all it is doing is managing the transition to lower gilt prices, higher yields in an orderly way. It accepts that gilt prices may ultimately fall back to these lower levels, breaking down to new lows, which means that it will be incurring losses on that 65 billion of bonds it just committed to buy today. Except actually the losses would not be the bank's losses. These losses will sit with taxpayers, and Kwarteng and Treasury have obviously indemnified the Bank of England for any faults in the values of the bonds it buys. Or put it another, high inflation for GBP, UK. And what's happening with UK is essentially the Lehman moment that the world is asking for in a 2008 type of crisis. So let's read through a few things that Stanley Druckenmiller in the Delivering Alpha conference said. He said that the conventional wisdom is that stocks go up over the long term. The problem is that what is long term? If you've bought in 1929, Great Depression, it was 15 years before you got back to break even. 25 years, sorry, 25 years. So you could be buying stocks for the long term, and yet 25 years, your money in stocks does nothing. At the same time, in 1966 until 1982, the same thing. So what was the problems then? We had a president who said the government was the problem, not the solution. We had a guy firing all the air traffic controllers in the country when they wanted a big raise. We now have a president who is a union man. He's talking about Joe Biden, who says he's trying to beat inflation, who cheers at 24% over a 3-year award to railroad unions. We have a president who thinks government is the solution, not the problem. Maybe more importantly, or I'd say this in terms of what we're talking about, if you look at valuations back then, the S&P was 50%. I'm sorry. The stock market was 50% of GDP. It's now 150, down from 225. That's because 5 years yielded 15% when I started Duquesne, so real rates were high. That's why we were at 8 times depressed earnings. We're now 18, 19 times inflated earnings, and I've got a very strong feeling it's going to be down next year. Then you have a secular force. You were right on the initial ramp of globalization. That's a fantastic thing. Building supply chains around the world increases efficiency, causing disinflation. That's been a trend for 20, 30 years. However, it's now going the other way. We are disentangling all of that. And that's going to be inflationary. Finally, we kind of alluded to it. The last 10 years of the bull market was in hyperdrive from $30 trillion of QE and zero rates. Now the consequences of that is born, and all those will suffer. So he's talking about Depression era economics where only cash is king, 4% interest yields, only the dollar is long-term king. And if you take a look on the buy the dip trend, there are two ways for you to actually beat the market. And there are only 2 periods or 10 periods that had unexpected rankings. If you never buy stocks during the 1955 to 1974, that entire 20-year era, then you would have outperformed everyone else who had bad timing, dollar cost averaging the S&P 500, invested immediately, or even people who had perfect timing, simply by never buying stocks. At the same time, in 1962 till 1981, these are the times that Mr. Stanley Druckenmiller are talking about. Also 1929, 1932s. Never buy stocks during Golden Depression, Great Depression era. So he said this, I have been wrong plenty of times in my life. The Fed was wrong. They made a big mistake. But it is not so much that they were wrong. I have been wrong a lot. It's the risk-reward bet that they made. There's some news this morning in England. 30 years ago, we shorted the pound in the quantum fund. I didn't know whether the pound was going to devalue. What I did know was that if they did not devalue in the next 6 months, my fund was going to lose 50 basis points. If they did devalue, I was going to make 2,000 basis points. The reward was a one-way bet. 40, I win. 1, I lose. Now, if you look at what the Fed did, the radical gamble they took to get inflation up 30 basis points from 1.7 to 2, it's to me sort of a risk-reward bet. You bet 1 to lose 40, and they lost. And who really lost? Poor people in the United States ravaged by inflation, the middle class, and my guess is the US economy for years to come because of the extent of the asset bubble in time and duration and breadth it went on. He's talking about the 2008 until 2022, but also he's talking about 2020 till 2021, where the Fed still refused to contain inflation. So it's actually not just USA that's getting hit or ravaged by inflation. Obviously, the world is paying for it. In fact, Filipinos are paying more for this. He said on shoring the pound, if they did the value, it's going to make at 40:1 one-way risk-reward bet. This is the reason why in the Philippine economy, it is a one-way risk-reward bet as well. Everyone believes that the Philippine economy is obviously not going to be able to handle this, and so we ignore it at our own peril. So on the risk of recession, they believe that our central case is a hard landing by the end of 2023. Therefore, SPY 36 is not going to hold. It's going to go 3-1, 3-2, 3,000, who knows what. I will be stunned if we do not have a recession in 2023. I don't know the timing, but certainly by the end of 2023, we have a recession and it's not going to be good. It will not be the so-called average garden variety. So basically, it's either a 40, 50% drop from 4.8 to 24 or 3,000. QE was a mistake. When you make a mistake, you gotta admit you are wrong. Move on. That 9 or 10 months when they just sat there, bought $120 billion in bonds, the repercussions of that are gonna be with us for a long, long time. On its general outlook, all those factors that cause a bull market, they're not just only stopping, they are reversing every single one of them. We are in deep trouble, and I like everything I'm hearing out of the Fed, and I hope they finish the job. You have to slay the dragon. That means that on November 1 and 2, when the Fed makes another meeting, it's going to be another rate hike. You've got millions of jobs that will be lost. And if you're not prepared, it's going to be a hard, hard landing. Now, Larry Summers just said BOE did the right thing to stabilize the gilts market. Larry Summers is saying that what the Bank of England did to solve the UK economy is good temporary, but obviously bad long term. And the market believes that good in the temporary is not good. It's going to still go down. Now let's understand, Summers is also warning the pound may tumble below 1. Let's listen to this. It's just 2 minutes.
Your take on what the BOE did today, intervening into the long end of the market for a couple weeks?
This was a market maker of last resort operation, given the severe problem being created by forced liquidations associated with pension funds who had been hedging their long-term liabilities. I think it was the right thing to do, given the technical factors that had arisen in the market, and it's obviously brought some important stability to the gilt market. It does not resolve any of the fundamental contradictions in British policy or address the tension between the anti-inflation imperative.
Bank of England today is even worse than the Philippine markets. Can you believe that? The Philippine market is actually outperforming the GBP when it comes to the currency. So obviously, the GBP or the pound is now becoming Mickey Mouse money like Zimbabwe. Now let's take a look at your Nasdaq, 17,000. 11,300. Some people are trying to hope these 3.6 is going to bottom out. The answer is no. We rally to 12,000. It's going to get hit all the way down, back to about 9.7 here, roughly here around November 2020. And that's not going to be garden variety, and that's not enough. We could even break further down. So hedge your way with a massive downside that will remain further in place. At least 2,000 points to go for your Nasdaq. You've got more layoffs, obviously the tech layoffs continuing. May, June, July, August, September, October, more layoffs. So prepare for winter. It is still not over. Unemployment rate, the Fed wants this to go above 10 to 15%, maybe in a year, maybe in 3 years. But the point is it's going to be painful. Hang Seng Tech Index today sinks, set for the lowest since the year 2020 inception, wiping out all the rallies since March. Global market turbulence weighing on high-value growth stocks. Apple ditched iPhone production increase after demand falters. Zero demand. Peak oil finally arrived. Really, those who have called the top in oil may finally be proven right due to demand destruction. Sharp global rate hikes hurting consumption. So finally, no matter if we have an energy shortage, we actually also have a Great Depression. So you've got the oil prices tanking, just like what happened during 2008 crisis. So the volatility in crude oil is massively to the downside. Any rallies at 80 still has leeway to go down to 75 or 65. So any trend here continues to be down. Take note that with oil, guys, there has been a 75% drop here, 2014 to 2015. There has been a massive drop here during 08, 75% drop from 140 to 40. Maybe because oil oil companies can actually make a lot of money even at $80. Their cash flows are there, but not forever. And so we still think that oil prices have reversed with downside moves to go, i.e. XLE has firmly showed us that it's now in a short phase. Any rallies of XLE are now shorts. These are short areas now. And no matter if we had underinvested in energy, we will see a longer slowdown and so lower prices for the meantime. Okay, summary of stocks to short and revalue to the downside ever further. We believe that the energy transition and solars has been met with a lot of hype rather than earnings, and so there will be a reckoning. First solar trading at 140, still at 52-week highs, is going to get sold off. Enphase at 290, also trading at all-time highs, will be sold off. CrowdStrike still staying at $170 is a good short. Tesla 290 is a good short. Albemarle Lithium, which is a supplier for Tesla, is also a good short. You've got the battery makers will have a problem there. CRISPR $70 in the genomics and the biotech is a good short. Pintuoto at 63 for the Chinese economy. Inverse funds to add into your existing portfolios. Add LabD, which is a biotech bear. Add JDST, which is a gold bear. NRGD, which is a oil bear. And FAS, which is all the banks, a financial bear. You also want to short Freyr battery at 15, Wingstop, which is a restaurant at 132, Beam, Cancer Place, $52, Monster Energy Drink, sell H, 100, sell that. Bloom Energy 22 is a sell, Sunrun 31, SunPower 26, and even the trade desk affirmed and was raising guidance. We believe that they're not going to make it. The trade desk 63, you'll get a lot of earnings downgrades next few months. Analysis on stocks to short on August 16. Let me read to you what I said on August 16. 4.3 SPY to 4.5. Although you weren't in my class, I did tell this. We said that SPY 4.3 to 4.5 was a great short arena. And we said that when it comes to shorting, these are the great shorts. Butterfly Network, PacBio, Envite, Bingo, Mara, Upstart, Affirm, Blink, Vuzi, Kurasushi, Dutch Brothers, Bumble, Sweet Greens, Roblox, Unity, Coinbase, Freyr Battery. As of now, from those short prices, everything has fallen, and only the few stocks that remain high is Freyr Battery, which is still trading at $15. So the only stock that you can still short in this arena is Freyr Battery. Amongst the longs that we opened, we said you could go long SARK at 43, go long QQQs, SQQQs at 33, Success at 33, FAS at about $19.50. These have gone straight to the moon. SARK is now $60, SQQQ is now trading at 54, Success has gone as high as $60, FAS is now 28. We still remain in play. How about these longs? We disagree anymore. We think that these longs are all shorts. So all these are all shorts, i.e. there's nothing to go long except Queen and King dollars. So how about the shorts here? Sunworks, we said short at 450, last price 423. This is now at $3. Canadian Solar, we said short at 48. It's now 36. Bloom Energy, we said short 30. Now it's 22. We still think it's going to be shorted. Plug Power at 30. It's still now at 22. It's still going to get shorted. Rivian, we said short at 40 and 37, is still at 35, still going to be good short. So Rivian remains a good short. Sunnova, we said short at 30, now it's about 22, still a good short. Everything that we said to short here is correct. We were actually a little bit early on Bed Bath & Beyond to short at 20. This reached as high as 30, but eventually it hit as low as $5. So GME and AMC, all of these meme stocks have fallen. Carvana has fallen. Canaan, MicroStrategy, Array has fallen. All of these shorts are correct. You can see that, so we talked about these meme stocks, cryptocurrency frenzy, SPAC extremes. From DraftKings to Fubo to CuriosityStream, Roku, AMC, all of these have fallen down. Silvergate, MicroStrategy, Fortinet, MongoDB, Bill, PacB, Bingo, and Vita. This tells us even Astrospace is a short. So all of these have fallen down all the way. We said that you want to short great earnings after the 50 to 100% rallies. There was a rally on Uber, Atlassian, Mercado Libre, Chipotle, The Trade Desk, and Net, that is a Cloudflare. All of these are shorts. All the bad earnings are also shorts because of challenging quarters. Roku was 90, it's now $60. Shopify was 45, now it's 28. Coinbase used to be 100, now it's at $70, $65. Beyond Meat was at 45, now it's at $15. Roblox at 55, now it's 35. Bumble was 35, now it's 22. Palantir was 11, now it's at 7 and 8. Fortnite is 55, it's now, I think, 40s. Dutch Brothers at 54 is now 32s. Sweet Greens is still at 218. Oatly is at from 4, it's now at 3. So climate change pump too high. Yes, we agree. That's why they are all shorts. Enphase is a short. First Solar is a short. Solar Edge is a short. SunPower, Sunrun, all these related climate change pumps are way too high. You want to short it to save your portfolios. Inflation 8.5%. Consumer fast food retail names, we said short them all. Today, what you can short here is still Wingstop, which is still trading at 135. We did say that the best short in retail would be Bed Bath & Beyond, which used to trade at $10 or $15, even hit a squeeze as high as $30, but eventually, of course, it went down all the way to $5. We think that it's still not late to short Chipotle because Chipotle is still $15.50. 1,700 was our shorts at August 16, but until today, we reiterate these shorts and continually short even Sweet Greens if you can short it at $20. All of these, we said Sunworks, that's it, gone, deads. Canadian Solar, gone, that's deads. Bloom Air Energy, that's deads. So look back on the August 16 where we said that's really going to just fall and fall away. And those are all correct. So let's take a look at today. We ignore it at our own peril. The Fed will not blink, cannot blink after being asleep at the wheel. They say that if the Fed stops this hawkish stance, we will have uncontrollable inflation all the more. And so we have to slay the dragon. And to slay the dragon means that the markets have to tank very, very heavy. Very heavy, as I said, very heavy. So the uncertainty principle, everyone is very jittery. This has been happening since August and September and October. Investors, it is far too soon to conclude that economic corporate earnings are out of the woods yet. Next 2 quarters will continue to have earnings downgrades and revisions to the downside. So this is your Sunrun, rallied at 39. Look at the August 16, it was 37.39. It's gonna fall furthermore until $20. The trade desk, it's rallied at $80. Now it's at 60. It is still gonna be all the way down now to $40. Bloom Energy rallied all the way to $30. We said short at 30, short at 26. Now it's at 22. It's still a continuous short. Sunrun, we said, so there, Sunrun is a short. Celsius, we said 95 to 100 is a short. Today, if you can still short it at 95 to 100, Celsius remains a big short. Direction, Julie Gold Miners. All right, these are basically shorting gold, and this $13 is still a breakout. 13, 14, 15, JDST is a buying area. Biotech bears, this 16, 20, 22, these are all areas to keep on buying Lab D. That means that we are going to continue shorting Envita, PacBio, Bingo, all of these Novavax, Moderna, all of these healthcare, CRISPR, Beam, etc. First Solar just got upgraded, but that is an area to sell, just like what Apple was upgraded, but is still a sell. You can see that there was a previous rally here at $160. At 136, can it go 160? 140 to 160 would be a great area to keep on selling First Solar. CrowdStrike is a sell here about 170 to 200. Continuous monthly sells. Good earnings is not immune. It's going to have downgrades all the way for the next 2 years, so it's still a sell. Tesla is also going to get downgraded and it's going to have a selling area. So Tesla here about 300 and 287 is a short. Albemarle here nearing all-time high tops is a short here at 280 and 300. Enphase Energy here about 290 and 300 is a topping pattern. We've got leeway to go 240s and 220s. It's a sell. Pintuatua here tops out at $70. At 62, it's going to go 40 and 22. Look out below. Freyr Battery, double tops, triple tops, quadruple tops here at 14, 15, 16. Big shorts on Freyr Battery all the way to 7 and 10. Okay, so that was quick. And let's go back to what we said in the past. This was our SPY 4345. We said these were topping patterns. Fortnite at 55 was a toppish pattern. Let's take a look where Fortnite is now because a lot of cybersecurity are topping patterns. It still is. Any rallies on Fortnite, 53s all the way down to 50s is still a sell. How about, so let's do this one by one. QuantumScape is now at 9 new lows. Luminar at 11 is now back to 8 or 7, now hitting new lows. GameStop, we said 48 and 50 is a sell, 40 is a sell. Where's GameStop gonna go? Continuous to hell. GME here, 50 was a sell, 40 was a sell, 30 is a sell. I don't know if it's going to go to 5, but there is a high likelihood chance that any rallies of GameStop is going to be continuously sold down. Meme stocks will not deserve any liquidity. AMC, we said short at 30 and 24. That was August 16. Today, AMC, let's just take a look at that. AMC is here at about $7. Yeah, so the 7 was actually evaluated here about, I think there was a stock split there. Either way, so that was continuously hitting new lows. So still no way to go for AMC, but downwards. Squeezes can happen, but squeezes are not reasons to go up. Bed Bath & Beyond rallied almost to $30, and nowadays it's trading at 5. ASTS rallied to 13, 14, 15. Now it's back to 7. Canaan rallied to 5. Now it's back to either 1, I believe. $3. Actually, any rally near 5 is still a short, no? So here at about $5 was a short, all the way down to 3, continuously sell off. Okay. Of course, MSTR, we made a short at 360. Now it's about 200, could go 180. So any rallies near 260 for MicroStrategy would still remain to be shorted by the markets. 240, 250, any rallies there would be a good short area. Additional areas to short MicroStrategy. What about individual names, right? So Array 24 was a short. We think that even at 16, it's still going to go down to 8. So continuous short for Array. Butterfly Network, this was a short squeeze. We said 3 went to 9. We think that $9 is going back to $3. So far, Butterfly is trading already at, I think it's already dropped all the way to 3. Wait, Butterfly Network. So it's about 5 today, and it's going to go down to 3. So 3 to 9, back to 3 or lower. Okay, what else? PacBio went from 3, 4 to 12. It's going to go back to 4 or less. So PacBio still a sell-off. So that's why you understand we are skeptic about these rallies on the biotech space. Any rallies on the biotech will remain to be a short. PacBio at about 6 would remain to be a short until it hits 4 and lower. Invitae rallied from 2 to 10. Now at 5, we think it's still going to go down to 2. That was August 16. Nowadays, where is Invitae? It's now trading at $2. So that means it already hit the lows. Maybe it goes survive, but it's still already there. So already downside, probably some short squeeze happening. But rallies towards 4 and 5 for NVTA would be shorted again and again and again. Same for Bingo. Bingo rallied from 1 nearing 4. Bingo is now trading at 2. So it's already down, right? So any rallies are all considered sell-offs. 1 to 4, sell-off at August 16, all the way to 1 again. So Mara has already fallen. This $10 area is still going to be a resistance all the way now back to 5 like last time. Short Innovation, this is this was your SARC. So we were saying 43.46 was the bottom. It will go back up. Indeed, your SARC went up from 43.46. It's now at about $60.58. Try to enter any dips at 58 all the way to 52. Dips would be an entry to buy because SARC will continually going higher and higher as the growth names will continually get pummeled and pummeled. Robinhood Markets stopped at 11, now trading at 9 and 8. What prevents it to go to 7? Nothing, actually. So remain short. We've got these areas of Robinhood at 10 area. It's a leeway to continually short. So you've got Robinhood, a good area to sell here, 10, 11. Okay. Upstart, we gave a sell area here at 33 to 35. Upstart, however, is at 21 today. Could rally to 25, but obviously it will fall furthermore. You've got Affirm topping at $40 here, 38 and 40. We said that's going to fall. Affirm did fall. It fell all the way to 19. It's now trying to recover at 20, but obviously it's going to also hit new lows. So very far, very hard. Stock squeeze, which was extended June, July, August. So we were saying that it was a clown. Only clowns would say that it's a bull market because there's no bull markets. The contributions to monthly change affects your shelter, your food at home. So you've got a huge inflationary rate for your inflation. Very heavy levels. We said SPY 43, Nasdaq 13,500, 14,000, Apple 175, Tesla 1,000, Amazon 150, Microsoft 300, Google 125, AMD 110, Nvidia 200s. All of these have played out. Netflix is still the lone strong one, but I don't think Netflix is gonna be averting any type of crisis anytime soon. Here at about $250, Netflix would still be a good short area in case you want. Ignore at your own peril, no? So continually add some shorts on Netflix. Apple is still a short. Apple here, even if it has fallen from 175 as expected here in August 16, here at about $150 to 155 is still a short until it hits $130. So a lot of somber news. As you can see, a lot of charts are also down. And investors might actually think that a short-term low could be in. We could rally 2 days and 3 days, but we think that any rally for the next 2 to 3 days would surely just be add more towards shorts, add more hedges. So I'm going to be short and sweet, but it doesn't mean that this day is over. Hell is not over, and continue to ignore at your own peril. That's it. Bye-bye.